Alright, I'm back and we're going to go over some examples of good trades and bad trades and what to look for, and just kind of give you a couple to, you know, just thoroughly repeat the visual signals that you need to see to be able to grasp this when you wake up at 2 in the morning and turn on your monitor and look at it and say, check, 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 I'm in, and then go back to sleep. So, alright, this will be the first one I show you. I remember this trade. Okay. As you can see, there's quite a bit of consolidation after a pretty good W here, and you can see there's real chop. It's really choppy. And finally, we get our at 5 a.m. we would have gotten our stochastics alert email, which would have looked a lot like this, saying, "Hey, it's going down. You need to pay attention." And we got K down through D above 50. Check. So one more time, K down through D, red line, above 50, check, good. Next thing you're going to look for is percentage of R is in the overbought condition, so it's been bouncing around. Oh my god, it's been overbought forever. Prime candidate to go down and go down hard. And it's above 50, which is our main concern. So once again, got our alert, K down through D, got it because the alert told us. Just make sure it's above 50, check. Make sure the percentage of R is above 50, check. Not only is it above 50, it's right around the 80, and it was at, right around -20, and it was 3 points away from being the maximum overbought condition it can be, so golden. So we're in at 5 a.m. and we're back to sleep for an hour, and you can see pretty quickly that you would have made quite a bit of money on this. And once again, there's the 200 EMA, and once it has prices broken through that, it generally continues to break through it, just like over here. When price closes blue above it, then it generally carries on like that. So anyway, so I hope you see that, and we're going to go over the exit real quick. And once again, you're looking for that inverted left-handed check mark is what you're looking for an exit. So left-handed check mark that causes it to close back above the 80 line. So we'll call our entry 4074, and here's a clear exit. Cross down through 50, down through 80, so now we're really paying attention. It almost caused us to get out here, but it did not close above that line. So as you can see, I'll zoom in just a little bit here, but you can see on this candle that it did not break through the line, and it continued down and then closed up on this check mark. So we're out here. So throw up the calculator real quick, and what do we got? What I say, 4070, what does it say, 4070? 4070 minus our exit would be somewhere around this candle when it closed back up over the 80 line. Okay, and that would have been 3966 minus 3966. We would have made a profit of 104 pips, or $1,000 if you're trading $10 pips. Or, what's even cooler to think about, if you're trading $500 pips, it would have made $52,000. So not too bad. Okay, so there's one. Okay, I'm back again. We're going to go over a long position here. So we got our signal right here about 7 a.m. Saying, hey, K is going up through D, below 50, check. Percentage of R is below 50, check. Not only is it below 50, it's been well below the -80 line, which is extremely oversold and will go up. And we're just waiting for our signal, which we got. So check, it's below 50, check on this one, and we're in. Okay, we'll call our entry right around 3866, and we're going to go long on this. And as you can see, the market was very flat, traded very choppy, had a little bit of pressure go against us here, but we're just trucking along, because once it breaks through this line, it will cross above the blue line. Once it breaks red, it will always go blue. So you're just waiting out, having patience, waiting for that exit signal, and once it hits the 80 line, or the -20 line, that's when you need to start paying attention. And if you would have been watching, you would see that next candle, which is a small red doji, a perfect top, showed a temporary reversal, which to us would have looked like the end of the move, but we know from hindsight that it continued on up. But the point here is to make money every time and not to lose money. So boom, cross back down and close. That's our exit. We're out right there. Let's throw this one up on the calculator real quick. So we'll call our exit 39.33. 39.33 minus our entry, which was, we'll call 38.68. 38.68. Just made 65 pips, or $650 if you were trading $10 pips. Now, of course, you know, the move did continue on up, and if you would have followed the old rule of the stochastic exit, you would have fared much better. I mean, you would have made, gosh, 42, 40, I mean, maybe 250 pips, probably. So, you know, that would be nice too, but you can't win them all, but you can definitely try not to lose any. So I think that's probably the best strategy we got right now. I'm going to try to find one more real quick. And, all right, our last one I'm going to show you here is the one we just did on Friday that Dad and I were both in. So it'll be a good one to check out here. And that was the 12th. Let's see, what was it? Right here. Okay, so our entry would be, I remember we got our alert at 1 a.m. To get in on this. Okay, and it was a short, so here's what we would have seen. That right there. Okay, so we got the K down through D above 50, check, go short. Percentage of R was at some point in the past recently way overbought, and it had to go down. It already started going down actually, slowly and choppy. But at the time, we would have been looking about a negative 38 above 50, so plenty of room to go down, so we're good. So we're in this position, and I remember doing this one specifically, and this is a very clean, simple exit. You really start paying attention. I mean, once again, notice the 200 moving average. Once it's broken, it continues to go down. But pretty much you're just trying to figure out, okay, how much money am I going to make here? You know, I'm going to make $500, $800, $1,000. You know, what am I looking for? And all you got to do is rely on your Williams percentage of R to tell you where to get out. So once it breaks through the 80 red, or the negative 80 red line, you really start paying attention, and you just continue to watch. You continue to watch, and finally, on this absolute bottom of the candle here, you get this pure exit V, this left-handed check mark. I hope you can see that. This long line leads down and left-hand check, and on this move right here is where you should exit. So I remember doing this one. I actually had, you know, once I see a V like this, like I saw this form right here, I go ahead and automatically move my stop loss in, and I actually had my stop loss set right here, so it was really perfect. I ended up making 130 pips out of 150 pips possible, so probably my best trade ever. And so I made $1,300 on this one. I know it's fairly quick. You know, we were in at 1 a.m. and slept through it, and then closed it out at, you know, 8 a.m. So I mean, really, you know, or maybe it was around 9, but very fast, very easy. It's 130 pips on that, so very, very good move. And that's how easy this can be. It's just a system of cross checks, you know, making sure you know what you're looking at, and confirming the indicators that you need to see to give you the confidence to get into the move. So hope this has been useful.